Anyway, we'll get there, guys. Um, 2 seconds, maybe three. We'll get the recording going. And away we go. Heidi ho, everyone, and happy new week to you. A new week of trading, and boy, oh boy, what a week it should be, given that we've got the US elections for one, but there's only one. There's the FOMC rate statement, there's the RBA rate statement, there's employment numbers coming out, I think, on the Kiwi and the CAD. We're all over the place, and I think there's a couple of other things mixed in there as well. We will discover those as Ash talks about the fundamental side of things upcoming. As I say, thanks for joining us. I'll just make sure everything is working. If you can hear me, a yay or a tick or something in the chat box would be good. But you should be able to hear me. You should be able to see me. I will now attempt to find the control panel that says I can share my screen. Here it is. And we're going to have a look at the 1 minute charts as always. Well, as a new thing, those of you who haven't been in here for a while, it's all about 1 minute charts at the moment. We're trying to find a good formula to trade those 1 minute charts. And, well, there was an entry there on pound versus the dollar that I missed. You've got to be quick, and doing things outside of the norm is not what you want, I can assure you. I've got too many buttons to press here. Okay. So further to that, the 1 minute charts, my methodology is on the screen pretty much. I'm using Bollinger Bands, and two of them. I'm using the 3 standard deviation Bollinger Band, which is the red line that you can see there. And I'm also using the 2 standard deviation Bollinger Band, which is the black line there. And what I seek to do here is find an oversold situation, which is what we saw here, where you've got the pound 1 minute chart. You've got the pound closing on the 3 standard deviation Bollinger Band and closing above the 2 standard deviation Bollinger Band. That's exactly what we want to see. But we want to see the second close above the 2 standard deviation band, not the first. So the second one was that one. So what we would do is we put an entry here and we'd put our stop loss here. This one doesn't look too flash at the moment. And really, it's timing. This is all about timing. Time of day, not just time of the minute that you're in front of the charts. So I will place that order. I can do that now. We've got an entry at 3, 4, 5, 6 bar 6. We can go with that, or we could just go at market if we get back to here. I think that's what we'll do. 3 bars of stop loss. 1, 2, 3, 4, 5, 6, 7, 8 bars of stop loss. Those of you who've got no idea what I'm talking about here, I'm using an EA to manage these trades. My take profit level is 2 to 1. I'm going to take first profit at 0.75 to 1. I want to wait till price gets back to here. So I'm going to buy if that is the case, if price gets back to that level. And I'll just go in at the market. The idea, of course, is to trade reversion to the mean. So currency pairs are very, very apt at doing that. And trying to capture that is exactly what I'm trying to do. So really what I'm saying is the market's oversold here and we want to see it come back to the middle. Now I'm using 0.75 to 1 as my first take profit because I'm a little sheepish on 1 to 1. The general rule with scalping, which is exactly what this is all about taking profit quickly. Most people who scalp would use a smaller reward than they would their risk. And that's pretty much what we're doing here. looks like we're getting pretty close to that level. So I'll just be very, very alert here in case we get there. If we don't, we don't. No big deal. As you can see, we're getting now, this is the first candle of London session. And you would expect a little bit of movement. What a week we're going to have, one would think. And I would suggest that maybe the smaller time frames are going to be the ones to go with, because directional bias is going to be very, very difficult coming into the US election and even going out of it. I've got a comparison that I want to show you guys a little bit later, that I've come up with some sort of a thesis, as I normally do. The thesis being that what happened in 2016 may well repeat itself. And what I mean by that, that order now is not going to happen, guys, because we've now got a new low. So I won't be placing that order, which is fine. And we don't have an order ready on gold either. Chosen gold and the pound versus the dollar because I think they're the most active at this time of day. I may be wrong with that, and our continued experiments will keep producing, hopefully, the right answer as to which pair to trade when. Where was I going? Back to the elections. A lot of speculation about what happens when or if Donald Trump wins. How do we trade that? A lot of speculation around what if I find that hard to say, Ms. Harris wins. A lot of speculation around that. In other words, what's going to move? How do you position yourself, etc., etc.? Do you position yourself on the way in? You know, there's a lot of speculation around that. My thesis is that, well, why don't we look at what happened last time we were in this position? And I've got a little chart set up for that when we get to that point. That point may come earlier than not. I just don't want to miss a setup for you, so I can show you how to trade these things. I found those. What I compared was six different assets. I compared dollar yen, I compared gold, I compared euro dollar, I compared Aussie yen, I compared the S&P 500, and I compared one other, the dollar index. So I looked at those and see if there was a correlation into exactly what the market did when Trump won the 2016 election. And it does show something that I suppose surprised me just a little bit. I expected to see something common in all of those assets that I just mentioned, and mostly that was the case. But there was one exception, and I'll point that out to you a little bit later when we get into if we don't have any trades coming up. I don't have any trades at the moment. As I said, I'm not going to enter that one because we've now got a new low. It's important that you use the low as your launch point rather than, and the low has to be on that 3 standard deviation Bollinger Band, right? So once that's done and dusted, as it has been here, that's no longer a consideration. So you wipe that one and wait for the next one. So we've had one of those, wouldn't have ended here. Had another one of those, you would have ended here, but you would have been stopped out on that. I didn't do that. It's prior to London session. As I say, timing's everything with this. You've got to get the volatility factor in your favour. And now we're into London session, the first half hour of London session. We do have that volatility factor in our favour. So all I'm waiting for is price to either go to here or to here to give me a setup. Here or to here. That's gold. That's the pound versus the dollar. So I've got absolutely nothing at the moment, except my good mate who's sitting beside me. Hello, buddy.
I've got nothing just yet. The market is moving, but there's nothing shaping up just at this moment in time.
All right. Well, if that's the case, I was just saying to the guys, this is a massive wick in terms of
yes,
the markets, and you know we get this once every 4 years, and I don't recall a time where it's possibly such a volatile situation that we're going to have. leading up
Yeah.
to and during and post the election. I've done a bit of a comparison. You weren't in the room when I was telling these guys. Done a bit of comparison with the assets that I think may trend or yeah, probably trend. I'm looking for a trend after the election. And I compared what happened when Trump won the 2016 election on six
Brilliant.
different assets, just to see what if there was a correlation and if there was something that we could maybe hang our hats on. If you've got nothing to do, I'll have a look at that.
Yeah, let's have a look at that. I think that'd be really interesting. I suspect there might be a bit of a weakening of the dollar actually if Trump was to come into power. But any research that you've got on that would be interesting.
Well, here's what happened in 2016, and I know the circumstances were a little bit different because nobody, apart from a couple of people in ATW, expected Trump to win. Right? He was long odds to win this election.
Yeah.
So here's what happened in this is the week before November, first week in November, right? Here's what happened election week. So the dollar index rallied for 2, 4, 6, 8 weeks before it went to trend.
Wow. Wow.
Against the yen, it rallied for 2, 4, 6, 8 weeks before it went to trend. The S&P 500 hasn't looked back.
Yeah.
That was the one exception. That's a standout, right?
Yeah.
Nothing changed. The trend just continued. Gold declined for 1, 2, 3, 4, 5, 6, 7 weeks, and then rallied, and we know where gold is now. It's nearly double
Yeah.
where it was then.
Yeah.
In fact, I think it is double where it was then. Euro versus the dollar sold off for 1, 2, 3, 4, 5, 6, 7, 8 weeks before it went on a rally and a trend. Aussie versus the yen. The reason I threw Aussie versus the yen in there was to just get an idea of whether the market went risk on or risk off, and
Mm.
if it did, what happened. And it would appear that the market just went into risk mode. It was happy, from what I'm seeing on this chart anyway. So that happened for 2, 4, 6 weeks. And then we went sideways and really nothing changed there. If I'm to summarize that in any way or get anything out of it, the stock market just loved what happened. Whether that was a result of, okay, we're now not uncertain anymore. The market's now got reason to believe that what's going to happen is going to happen, rather than, are we uncertain? Which is what the market hates, as we know. That's really what I get out of that. But the second thing I get out of that is the immediate reaction may not necessarily be the trend that we pick up after the election. So most of these have gone one way for a period of time, 2 months, it would seem, and then the other. The interesting part about that, I thought 2 months doesn't make a lot of sense to me, because as we know, the election doesn't come into effect until January. So
Yes.
we've got November, 2 months, December, January. So it's actually when the president-elect takes office that the market went to trend in most of
Yeah.
those cases. I
Yeah.
find that interesting.
That is interesting, mate. And there's another situation as well that around that particular time there will be a vote on the debt ceiling. Certainly this time round, so early in January they'll be voting on the debt ceiling. And at some point you would imagine that they won't raise it. Will it be this time?
Oh,
It's very difficult to
really?
say. But that will have a huge effect on the dollar if that was to happen.
Wow, yeah, absolutely.
And probably much more of a significant event itself than the election.
So what we're saying here is if they did that, it's the first time that they've exercised fiscal prudence.
Yes. Yeah, it would be.
That's amazing.
Yeah, and
And
it'd
I was
probably come down
staggered
to,
that would be the case.
it would probably come down to the Senate. Who's really sort of if the president is different to the Senate, then that might actually make a difference to whether the debt ceiling is going to get raised or not. Whether they raise the debt ceiling. But if I mean, even if the Senate is against them, it would have huge implications on America. Um, if they have to default effectively on payment
To say
because they
that
don't
is,
raise the debt ceiling.
I mean, I don't know how long we've been talking about this, but at some stage, as we all know, we have to pay our bills.
Yeah.
And if they've actually realised that, I'm kind of staggered. Is that going to be, do you think, reliant on who gets office? Or
I don't actually know. I
right,
think I don't think it will matter. In a way, I don't think it can matter. I think it's such a uh it's such a huge kind of driver for markets, liquidity and how much money is kind of bouncing around the system. It's such a significant aspect for everything. S&P, Nasdaq will be affected. The dollar will be affected. That that they probably need really you would hope, and it might not be the case, but you would suspect and hope that it wouldn't be something that could be political. It would have to be something that is, genuinely affordable. But it's a strange thing because the conversation in this country more and more has become about the future generations. Now we know that the borrowing that was done, during really, I suppose, the amount of debt that's been racked up, really, sort of like since the 1990s, right the way up to now, has been huge. The actual kind of jump in the amount of money being printed has been massive, really, ever since we saw the tech boom, I suppose, particularly the financial crisis in 2008. Then again during
then COVID.
COVID. Yeah, and the thing is, somebody has to pay that back.
Mm-hmm.
And there is a movement really now over here that, suggesting that the younger generation um, that can't afford to buy their own home and will have to pay higher taxes, while the generation that did the borrowing, but by
They,
no fault of their own, but they did the borrowing, because that was the system at the time. But the generation that's done the borrowing are basically going to retire, and it's the younger generation that pays for them in retirement. If you think about state pensions and stuff,
yeah.
and there's a movement here that to suggest that they're going to go, no, we're not going to do that. And you've racked up so much wealth during that time. Let's tax your assets. Let's get you, under the cosh and tax your assets. And the current government that's come in, the budget that came out recently has made a huge movement towards that. It was a big attack, if you like, or sway to attack the what they call wealthy, rich people, but there's a lot of people that kind of fall into the bracket, probably more middle class actually. But basically, anybody that owns stuff, anybody that owns assets, they're going to get hammered. Stamp duty went up on buying new properties. Capital gains went up on selling properties. Capital gains went up on selling stocks, and pensions can't get passed on. Inheritance tax changed. So anybody that racked up the wealth during that period, which there was a big redistribution of wealth during that period, because
Absolutely.
the people that were able to have cash on the hip during a crash, inevitably, you talked about gold's doubled in price. The S&P, I don't know what that's done, comparatively to that particular season. Just thinking about COVID, it's probably doubled in price. The Nasdaq's probably, done a lot more than that. So there has been a huge shift in the wealth of people. Anybody that could get their hands on cash and buy assets at that time, they're dandy now. So the movement now is to say, well, we're going to have some of that wealth back. Um, and you'd have to
Wouldn't
argue,
surprise me if that's been discussed at G7 level, or
yeah,
even bigger, because I
yeah,
think there's a move for that around there is a mood for it. There's no question about that. And I
yeah.
think,
Well, that
yeah, the heads of government have probably been talking about that amongst themselves, I would think. How do we
And it
solve this?
filters, yeah, well, it filters back to the debt ceiling. You know, that filters back to the debt ceiling, where they sort of like say, why, why the younger generation continuing to pay the debt, the next generation? Why are we pushing it back and back and back? Because somebody at some point has to pay for it. Um, unless they default, you know, this is the just so everybody understands their two choices. They either default on the debt and become a country which is untrusted, that can't get credit again, or they figure out how they're going to pay that debt off, and they figure out how they're going to pay that deficit off. So they're I think we're probably in or nearer that time than ever before, and that might change things in January. So the election might have an effect, but you know we get into November, December, there's probably status quo, i.e. we probably see the S&P continue to move in the same direction. Which, when you look at the charts that you've got there, um, were they basically kind of continuing on the prior trend, or was there a switch around? Yeah, I mean, I suppose that one was continuing, wasn't it? S&P
Yep.
continues. Gold had already sort of started to shift a bit, I suppose. It's really, gold's in a range from what I can see from that, and it was just coming back to the bottom of the range. Um, so there was probably status quo when it came down to the technicalities of the chart. Um, and it's the same when you look at the euro dollar and the I mean
Well, I
that's
threw the yen in there just to gauge
yeah.
whether there was a risk on, risk off
Yeah, I
difference.
mean the chart. I suppose the point is the chart doesn't look like unusual. It doesn't look like anything unusual happened.
No.
So yeah, I don't know whether it's going to have such a huge effect in the long term. It will on the day, and it probably will this week. And you see that the sort of the week it happened on the euro, I presume, is the week after the red bar. So
Correct.
you can see, is that right? Yeah,
Yeah,
that was
yeah,
the election
yeah.
week. Yeah, so.
Elections this week. Yep.
Yeah, so that's an unusually unusually big bar, but then the market settles down and it kind of gets into a groove again. So yeah, I don't know, mate. It's difficult to know what the driver is, but we are always talking about time frame. So drivers are one thing, but time frame of drivers are the biggest factor. You know, are we sort of talking about, are we looking for 6 to 18 months ahead? Are we looking for 3 to 6 months ahead? Are we looking for 1 week to a month ahead? You know, so all these things and the way we trade are a factor in this stuff. Um, and um, and it's difficult to sort of to suggest that there will be. I think the longer term position will probably be the safer way to play this right now, because we're so close now that
Well,
that
take
taking trades on short term
however.
positions now could get battered very
Yeah,
easily
look,
just by
look, I
wide
think
spreads.
there were two things I took from that comparison that I did, and one was wait till the election's over,
Yeah,
and you're going to get a good guide as to what's going to happen in the next little bit. That's what I see there. And then when the person actually takes office and maybe signs an executive order that says former presidents or current presidents can't be prosecuted in any way, shape,
yeah,
or form, or in that sort of vein. And the Harris story, I don't know what she signs an executive order, whatever. They actually showed their colours. Here's where we're going.
yeah,
Here's what I'm going to do. And it seems the market changed in all but one asset, and that was the stock market.
right.
Everything else changed except the stock market
Mm,
when the uh, the new president took office.
right.
I
Do you
found that
know
interesting.
that yeah, is really interesting, and I think this is the I really like this because actually the analysis of what happened in a point in time is really sort of how we get things moving forward. And
Well, as
I was
chartists,
gonna
that's our business, right?
exactly, yeah, and I was gonna bring that to COT data actually because I've seen some really fascinating things on COT data this week. Um, and if I was to look at, I'm happy to take the chart right
Yeah,
now, but
by all means. I've got no trades yet. Um, we're nowhere near our limit, so all good.
great, okay.
I'll give you a whistle if there's one.
Thank you, mate. Okay, so looking at this, and you know, it's this is the thing. The COT data won't won't tell us anything about setups or you know, when we should trade necessarily. It's sort of, it's a general kind of idea, and the seasonality is a little bit like that as well. But it's the difficult thing with seasonality is that we are in a presidential election year, and it sort of jerks the seasonality aspect around a little bit. So it's maybe not quite as significant, the seasonality. But let's look at the COT data. And I'm just going to change this to white. I really don't like the black. And see what that's suggesting. And there's a big suggestion as well. And what it's pointing to, the COT data, is pointing to the yen, dollar yen, anything else. Yeah, I know, mate. It's a tough one, isn't it? I mean, look at the price action here. Look at that gap. I mean, we're talking about currencies here. Big gap on the currency markets. You know, between 25th. Well, I mean, I suppose that is over a weekend, but still, you know, to see a gap like that is unusual. The weekend aspect does change it a little bit. You know, if that was a gap between Monday and Tuesday, that would just be astonishing. But you know, there's a gap over the weekend, but it's a big one. So there looks like a bit of a shift in sentiment. Then what we get is actually, is that big enough? What we get is a spinning top. And that spinning top is telling us explicitly, I don't know, you know, that the body opens here. There's hardly anything between the open and the close. It did try and push higher, also tried to push lower. I suppose it closed the gap down as well, pushed lower, but in the end, it went nowhere. And it was basically, I don't know. And the same thing happened the second day. I don't know. Same thing happened the next day. Look at the body's tiny. You could compare. There has not been on this chart, even here, even there. You know, we're looking back in July. There has not been a situation where you've had three bodies that have been this small consecutively.
Yep.
Not happened. And you could probably go back and sort of like continue that and see when the last time that happened was. Those two there. There's one there. There's one there. It's very, very rare. Anyway, that in itself is giving us a bit of a warning. See a bit of a sell-off, try to push back up again, see where we are now. So right now, we don't have an area that suggests that we've broken one way or the other. Now, if you sort of like, you know, put on a trend line on that, that's probably what you're going to want to see if you want to face this one to the downside. But that's what the COT data is suggesting, that the yen is a buy right now, which means the dollar yen's a sell. Now, it's not the best currency to sell against the yen. The best currency, the one that's coming up the most, I suppose, that giving us the loudest and most prominent signal, is the Kiwi. So this is suggesting, the COT data is suggesting that the Kiwi's a sell. Now that means that the Kiwi's a sell against the dollar, effectively. Which would be, where are you, Kiwi dollar? I'm just going to quickly scroll through this and see if I can find my Kiwi dollar.
While you're doing that, Kiwi's having an incredible time on the sporting fields at the moment.
Yeah, well, I saw the England versus New Zealand rugby, which was a brilliant game actually. I thought New Zealand were way the better team, but they almost lost it twice. I don't know if you watched that game. It was very good.
They beat India in India 3-0 in the cricket.
Wow.
No country has ever done that, to my knowledge.
Right. Yeah. It is amazing, really.
Then there's more sheep in New Zealand than there are people. So
yeah, do you know that? Do you know where the interesting thing is? And I think it's almost a lesson, really, in life. What New Zealanders have decided to do, and they're very good. I mean, they're rubbish at football. They're rubbish at American football. Rubbish at basketball. What they are very good at doing is saying, we are cricketers and we are rugby players, and we're going to bash you all at that stuff. Because you don't need to have all this other stuff, do you? Isn't it better to have something specialized and win at it than try and cover everything and win at nothing?
if you have a conversation with a certain Kiwi that we know very well
Yeah.
in the next few days or weeks, he'll tell you that that's not necessarily the case. I think they won about 4 different sports or 5 different sports at world level.
No, really.
Yeah, including netball and minor sports if you want
Yeah.
to go that way. But they just bat so far above their weight. It's
Yeah.
amazing, amazing country, beautiful
Yeah.
country.
Yeah.
If
Yeah.
I
It's a
wasn't
quite.
Australian, I'd be a Kiwi.
Well, you would you?
Yeah, I would. Yeah.
Yeah. Um. The so this is the Kiwi. This is the Kiwi. Now the Kiwi suggesting that it's a sell, but it's against the dollar. But if the yen is a buy against the dollar and the Kiwi's a sell against the dollar, that means that the Kiwi yen is where we should be looking for a short.
Do you
Now
think
let's see
that's
what.
always the case? And
Yeah.
I do that a lot, right? I do that cross comparative or relative strength, if you like, which
Yeah.
which we're talking about. Sometimes it's not. I
Okay.
find sometimes it's not because there will be a certain nuance to, pardon me, the one that we're trying to line up. If it's the dollar in this case,
Yeah.
then sometimes there is a nuance. But I think as a general rule, I absolutely on board with what you're saying.
Do you know why I think as a general rule it works and it works well enough is because I'm really talking about what's at the extreme end of the of this market and this market. So there's nothing if it was a little bit in between, like let's say that the euro was slightly stronger against the dollar and the pound was slightly weaker. I don't think I would be so keen on a euro pound long
Mm.
at that particular point. But when I'm talking about the I'm looking at the currency which is right at the other end, the strongest one against the dollar and a really strong buy signal as well. But by the way, it's not just a buy signal; it's a really strong buy signal on the yen, and it's a really strong sell signal on the Kiwi. So because they sit sort of so far apart, then I think it's relevant.
Yeah.
And now whether and I take your point, whether that means that actually that is the currency pair, or whether you should actually just trade long yen versus the dollar and short Kiwi versus the dollar and just keep it like that way. That's obviously a lot. I suppose it's a lot clearer and a lot cleaner. But I think that this is still valid, and I still think it's actually the better way to trade it. I think it's a better way to put these two together. And I think about that with seasonality. You know, when I look at the seasonal data, if I see, the way that I sort of construct the grid is that if I see something as a buy against the dollar and something as a sell against the dollar, the way I construct the grid is then I'll use those two against each other.
Yeah, yeah.
Um,
And
and that
I'm
was
totally and fully on board. I just thought I'd make the point that it's nothing's 100%.
no, No, you're absolutely right. But do you know what I will always do, however, is check those two actually as a partnership as well.
Yep.
Not I won't do the whole data set, but I'll check sort of partnerships like randomly just to make sure it lines up with doing it that way. And
Yep.
and so far
It's
I've not
another tick.
noticed another tick exactly.
Yep.
But just looking at this Kiwi yen, the Kiwi yen is pointing to downside. Now, the Kiwi yen is a currency pair that could be significantly affected after Wednesday, after the election, and after maybe even Friday, because then there's also the interest rate announcement as well. You know, we got double barrel this week. So this one could be. Is it tomorrow? It's tomorrow, isn't it? The election.
No. It's Wednesday my time. It's the 5th, right?
It's the
So
fifth, and
it's tomorrow my time.
today's the
So
fourth.
yes.
Um,
It'll be 5th my time. It'll be
okay.
about, where are we? It'll be
Is it
about
the
now,
third where
won't it?
you are?
No, it'll be a bit later.
Oh, okay. Later in the day. Got it. Okay. So yeah, so the interest rate annaouncement is actually on Thursday. That's
But
why I
then
was
we've
getting.
got to contend with how long is it going to take to get a decision. So,
Yeah, true enough.
and I
Yeah.
don't know the answer to that question, frankly, because
No.
and what happens if it's close? Both sides are probably going to go, Oh no, hang on, we need a recount, or it's rigged, or this could be messy. This could really be
Yeah.
messy.
But the Kiwi yen. So what we can see here is this trend line down here. Now this trend line down here beautifully, I think it's really nice because this one
Yep.
really meets with this horizontal level of support, which suggests that we get a breakdown along here. And that's this is where we use COT data to give us, I guess, what I would use as a suggestion. The COT data is suggesting we should be going short Kiwi yen. Then we think about the chart. Now, what's the chart saying? Well, the chart saying at this point is that we have got we're in a trading range, and that trading range kind of, you could say it's along here and kind of along here as well. That's probably what we're really looking at. This pattern here. And it could get a little bit more difficult if you're trading breakouts. This is where breakout trades become more tricky because you don't exactly know where the breakout line is. But these lines look pretty clean. There's not a third touch, which makes it a bit more difficult. But this low here is going to be significant. But what this is sort of suggesting is that this trend line is a good one. So if this does break down, then the chart will also start to back up it will start to back up what's been suggested on the COT data. So if we get something like that, trading either of these two bars would be difficult. But if we could get a retracement and giving us the lower high, then we can probably look for a sell position along the trend line. So that's really what I'm looking to shape up, mate. I'm really interested in what the COT data provides, but we can't do anything until the chart really sort of technically does it, because really, chart delivers what we're reading for, what I'm reading anyway from the COT data. What I can't do is trade in this particular area, because this could quite easily happen. We might get a situation where we're just going from there right the way back up again, and this would change. This would change this to a bullish scenario, and the COT data might stay locked, but it might be saying that the situation might be, because actually the Kiwi this week is really strong seasonally. Now the seasonals, they could sort of take the skew out, but so that should tell everybody be cautious, because the COT data is saying that the participants on the COT report that report on on the Commodities Trading Commission, those traders are short Kiwi. That's what it's telling us. But seasonally, this tends to be strong at this time of year. Now that doesn't matter really. What happened in history doesn't really matter if what's happening today is different. But it is saying to us, be careful, just in case there's something that's unseen out there. So this is why we've got to wait really at this stage. But I like the fact that we're in a trading range here, mate. If we didn't have an election tomorrow and this came up here, I'd sell it. But there is an election tomorrow, so I'm not gonna do that. I'm gonna wait for the break, wait for a retest maybe, and see if I can get into this to the downside.
Can you swing your resistance trend line down to the high that follows the first high?
Yes.
That one. Yeah.
Yeah.
No, that's not the high. It's the little fella. That one.
Yeah. Yeah. Like that.
That's interesting.
Yes, it is. Yes, it is. And I tell you what's really interesting about that is the different way that we can see charts. And I tell you what, mate, thinking about it this way, I like this, because what this is saying is that if this then, and it kind of in a way backs up my thesis of where we should try and get in, because if this all of a sudden breaks this low now here, this can break this low here, which looks like the support area.
Yes.
Then we've got an even better trade, right?
It's a big signal, isn't it?
Yeah.
Yep, great.
Very, very bearish bar as well to hold. I mean, if you look at the most recent three bars, similar of what we've seen. Look at the similarities between this and what we saw with the dollar yen. So this is basically sort of saying that the move was probably more to do with what happened with Japan than anything else, because that's the coefficient between the two. So you got 1, 2, 3 of those little doji bars. Then we had the sell-off. Then we had the attempt to get back up again, and now we're starting to push back to the downside. So the chart really over this particular period is actually showing some pretty negative sentiment, indecision, and now sort of some negative sentiment. So it's not set up yet, but there are whispers, I think, when you look at this chart that actually this may well play out in the direction that is being pointed to by the COT data.
Cool. That's your favorite way this week, if it sets up?
Yeah, for sure, mate. This is the best for me because everything that sort of influences me is off the chart, and this is the best I've found, for off the chart. And it's a really, really really solid signal. And actually, if you're free after the show, if you want to have a quick meet up after the show, then I can show you what I mean.
Yeah, sure. Yeah, I do. I do have a few minutes. Absolutely.
Great.
Got a potential setup coming, so I'll show everyone that. Can you sort George out today?
Yes, I can indeed. I'm on Skype, so let me bring it up.
All right, awesome. I will show the potential setup here on the 1 minute chart. It's gold versus the dollar, XAU USD. Wow, are you finding Zoom has changed?
Yes, it has, mate. Yeah, I've noticed it's called like Workplace Zoom or something now. I don't know if it's changed for the better though, but it has changed.
Well, it's not letting me share my screen, which is extremely frustrating.
Oh, let me stop sharing and see if that helps.
Maybe that will help, but it shouldn't be like that. Okay, it did help.
Guys in the room, by the way, I really appreciate you you coming in today. We had an IFP last night. I'm not sure if that would have a bit of a hangover, but
Did you?
yeah,
Okay.
good to see you guys. Anyway, good to see you all come in.
I don't think everyone's caught up with the change of daylight saving yet. But
No.
So here's what we've got. We've got the the 3 standard deviation Bollinger Band here. And now we've got to close below the 2 period, or the 2 standard deviation. I get those wrong all the time. Now we're looking for a second close underneath the 2 standard deviation Bollinger Band, which looks like this one may be. If that's the case, that becomes a trade under here with your stop loss up here. Much prefer to see that pull back, but it hasn't done that. So that becomes your entry. Too late. We've missed the entry. That's what you've got to be really fast to catch it. But that would be your entry right there. And
where's the profit there, mate? Where's the take profit?
Okay, profit for me is first take profit's 0.75 to 1. I'll put that on there.
Could you take it on this pullback?
No, I won't. Once I missed it, I missed it.
Okay.
It needs to pull back before, for me.
Okay.
Before once that's happened, the dynamics change for me. So I don't like it. 0.75 to 1 would be the first take profit. So we've got, let's say, 13 pips. 3/4 of 13 becomes, let's say, 10.
9, isn't it? Yeah, 9
something.
9.5, 10, yeah.
We'll go with 10. So entry would have been at 27.37. Let's go with 27.27. Which is, that can't be right. Have I got that wrong? Entry there.
Yeah. Yeah, 27 to 38. So you got 38, 37.
From there, it's going to be 27.28, let's say. That's ridiculous.
No, no. The pips are the 2 decimals. The numbers after the decimals you're looking at.
Okay. So 38, right. Still becomes 28, but I've got to get there somewhere.
Yeah.
27, 36, 28. Righto. So there's your first take profit. It's got to hit that level, but we're not in, right? And that's where it's tricky on a 1 minute chart. You've really got to be ready to take it. And right there, you'd have to go bang in that market. I don't chase them, but this is a great lower high now, so it does look good for mine.
Yeah.
Nothing on pound versus the dollar, but that does look good. Look, I'm still trying to work this out.
No, that's okay, mate. I mean, yeah, this one may well work out. KW, thanks, mate.
It's Catherine. Hi, Catherine.
Is it Catherine? Oh, Catherine, how you doing? I don't like it when why do people put KW? Not you, but why doesn't Zoom just name people properly?
Falling under the radar.
No, it's okay. It's all right. Now I know it's all right. Yeah, I don't know if you got the same message. So just
No.
good analysis. Yes, Catherine's just saying it was good analysis and a nice job over the weekend. Thanks, Catherine. Yeah, you too. And probably even tougher you to come back in cold as well after not sort of doing a couple. So well done on that. Yeah, I think today is I don't know what you got from Jeff and I's session today. You're welcome to come on mic. But I think the big takeaway that I've been thinking about for a while. Are you on mic?
Yeah, I've got. Yeah, I didn't realize I could.
No problem.
I don't know. The thing is, I joined today. Sometimes I can't and haven't been able to, as you guys know. But the thing is, it's like sort of there's so much talk about it and just so confusing.
Yeah.
And actually, one is when you don't know what to do or you don't understand it. I just want to stand on the sidelines. But I thought it'd be important to sort of come in today and sort of listen to what you guys might think, and have some what I would say like sort of trusted perspective.
Yeah. No, I appreciate that. And actually, I think Jeff and I have been saying the same thing for a while. Jeff and I sort of have been talking about certain trades that might shape up, but we're both under the same opinion that there's no real reason to trade through the next 2 days. No. Because what we're looking at is kind of maybe longer term situations, sort of if you're trading on very short term charts, even then it's the longer term things that kind of move the market. But these one-offs, they're so difficult to, and it's because it's a flip of a coin anyway. What's going to happen with the two candidates. But I don't really know why anybody would trade through it. And if you look at the market right now as well, you can kind of see what everybody else is thinking. The market's just not moving. So even just looking at MT4, yeah, even looking at MT4, like it's basically telling you there's nothing to do for 2 days. You shouldn't be doing anything for the next 2 days, or if you do, it's probably going to be very frustrating if you've been trading a particular way right up until this point, because the next 2 days will be different to any other environment you've traded over the last 12 months. So it's not trackable. How your performance is going to sort of how you're going to behave during that period. It's not trackable. So I think you're just better off staying out of the way, personally. And I think Jeff agrees.
Thoughts, if I may,
Yeah.
I echo back to, I think maybe a couple of Sundays ago, maybe Gordon was doing the Sunday market update, and he mapped 2 levels for the S&P, and there were 2 tails, one on the high end, one on the lower end. And I remember his comment was that, well, let's see where the market breaks out of either way. And that will be very telling. And then last week, actually, I saw that it broke down, actually. Yeah.
Right.
Earnings or something like that or whatnot. But then the thing is, like, from a short-term day trading or whatever basis, I think I'm totally with you, just because there's the uncertainty, it's like, it's like flipping a coin, right? So why do you want to do that if your odds are only like 50-50 and there are valid arguments like both ways? But if you look at a longer term, and a lot of us maybe just not, we don't always like just only do Forex or gold or something, but we all buy stocks or something longer term. but you can definitely see how we're near the top of the market. Well, we're probably at the top of the market. And I think what Gordon said, right? And I think, I think Julian's sentiment cycle.
Mm.
And it could be a subtle warning right now because we've broken the 50 MA. Yeah.
Yeah.
So what's actually kind of really weigh on my mind is that with some good fortune or whatever, the US stock, I've got some US stocks that are, in pretty good profit.
Yeah.
And I think I should just sell them and then just wait until, everything settles or at least I'll sell my capital and just let the profits be there. And so I'm
Yeah.
actually, what I
Yeah.
mean?
Yeah,
Yeah.
that makes more sense. Yeah,
Yep,
so I mean,
I
selling
agree
out.
with that.
Yeah, because do you know somebody was asking me this quite recently. A young lad was sort of talking to me about stocks and stuff, and he said, is there anything you could do to help me? And I said, look, there's nowhere near long enough for me to really give you the information you need. But let me tell you one thing, because you're young, you've got chance to wait, and the thing to do is wait until there's blood in the streets and a big crash, then just buy. Just buy the index, you'll be absolutely fine. It always goes up.
Yeah.
You've got plenty
Yeah.
of your life to do it.
Yeah.
And he said, well, I've got positions on long now. Should I close them and wait for the crash? And I said to him, no, you shouldn't, because nobody can pick the top and nobody knows what's going to happen. So from any money you earn from this point, save it rather than investing in the stock market. But it's worth leaving on what you have, because as I say, this sort of like we make these assumptions that we know what's going to happen, but nobody does. Even the chart can tell you what's going to happen, and it still reverses and does something else. So
Yeah.
you're always better off leaving something in the market, I think. So I think that's wise, taking the profit or letting the profit run, but taking the capital. I think that's very, very wise.
Yeah.
Jeff's got a winner by the looks of things. Nice work, mate.
Yeah, but I didn't trade it.
It's all right.
That's okay.
I mean, at the minute we're just trying to form the strategy, right? So I still like the fact that we've got something there.
The target becomes 2-1 now, right? So we're safe in the market. Stop loss has gone to entry. We've taken half off. This is the method I'm using, right? So the profit take all is 2-1, which means 36 becomes 72. 2-1. How do I work that out? 27, 38, 35, 127.
So you just need 26.
45.5.
Keep coming.
Which
Keep
is
coming. There. It's about there, isn't it? Yeah.
So 2734.52. There. That's the target.
Nice.
Okay. If anybody doesn't understand what I'm doing there, I fully understand that. Getting back to that point, Catherine, I'm actually doing a presentation for, I can't even remember what we're doing in December, but there's 12th and 13th. That gives you an option. The method that I'm using gives you an option if you've got a strong directional bias over time. And what I'm talking about is, let's say, even now, let's say you think gold's going to $5,000 and you've got very strong conviction about that. I think there are ways to either A, buy and hold, B, trade it, and C, do a combination of both.
Yeah.
And I think the method that I've picked up over the last maybe 12 months, 2 years, which I'm going to share with you guys in that presentation, is really cool. And what it does, it allows you to stay in the market all the time as a holder of that asset. It allows you to, and I'm calling it money for nothing. It allows you to pick up units in that stock by selling. It becomes a little bit complicated by selling, as you say, you're right now at the top, right? Let's say you've got a $10,000 investment in that stock. You can split that into three, if you like. So 3,300, 3,300. Depends on how you bought them. If you bought it as a $10,000 investment, then if you think you're at the top, sell the lot, because it will come back. Don't know when, but it will come back. And when it does come back, you buy the $10,000 back at a lower price, which allows you, sorry, when I said sell the lot, you have to keep some, the lot of the third tranche, if you like. You have to keep that, because if it goes lower and lower and lower, you've got the ability to buy it again and again and again. But what you're actually doing is you're gaining by buying it back at a lower price. If you're selling X amount, which is what you bought it for, this is getting very complicated and it's not meant to be.
No, it's not actually, mate. It makes a lot of sense. So you're basically buying in 3 tranches. And actually, why don't you draw it? Could you draw it on the chart? Does it make sense to you, Catherine?
Sort of.
Yeah,
Everything
yeah.
down, everything down, I think, is what Jeff is trying to say. Basically, I think what Jeff is saying is it's for the same $10,000 in the same stock.
Yes.
Right? You sell some, so you kind of save. You've got that profit. Let's say it's the profit, right?
Yeah.
And so that's kind of risk-free capital for you, right? Even if you lose it, right, you're back to square one. But if the prices come down, then you buy again in 2 to 3 tranches or something like that. If you believe in the long-term prospects. And so you end up with a better re-entry price, I suppose.
Yeah, but here's the thing. You don't do it in unit terms.
Right.
You do it in dollar terms.
Right.
So your $5,000 at $1, if you like, is worth 5,000 units, right?
Yeah.
When you buy it back at 75 cents, your $5,000 is worth 6,000 units, right?
Yeah.
So you've actually gained 1,000 units for free. That makes sense.
Yeah. Yeah.
So that's the methodology, I think. And of course, you've got to get an asset that's going to, over time, and you're very confident over time that that's going to not be like gold. In my case, at the moment, it's uranium.
Well, I mean, if you were doing that, I mean, the stock picking stuff, right, then comes in, right? Then you might as well do it with the index, no? I mean, I think the unit
Well, you can't do it with the index because you don't own the stock.
Yeah.
You've got to own the stock.
And can you do it with an ETF or something like that?
With what, sorry?
With like an ETF?
No, because you still don't own it.
Yes, you do. I mean, you get like shares or units, right?
Oh, do you?
Yeah, with an ETF you do. Yeah. You could do it with an ETF.
Then it's not that. You see what I mean? Then you're not kind of like stock picking per se, in case you're wrong, right?
I don't do it. Wow, that was a good trade, Ash. Well done.
Now you wish you were in it. Yeah, it was a great trade. Look at it go now. All of a sudden, we're starting to get a bit of movement in the market.
Anyway, I'm going to do a presentation on it, which will make far more sense than what I've just explained to you.
I think it's great, mate. I really like it, and I think really what the first job, of course, with this sort of like particular method is get something you're really confident about, And the good thing, yeah, I mean, what I like about that is that it forces people to be truly questioning their trade in the first place. But it's not just a trade, is it? It's an investment / trade. So you're investing long term, but you are trading in the way that you you allow that that particular investment to behave, the way you behave around that investment. You're trading an investment in a way, because as you say, you actually own the asset, but you are going in and out. And I think about trading as anything that opens and closes within 3 months. Investing is you're going to let it run, but trading is when you're sort of in and out of the market, dipping in and out of it. So I think it's a really exciting and
I'll do a
cool thing to
demonstration
learn.
that proves that. But it's not for arranging. It's got to be something that you've got full confidence is going
Yeah.
to be higher in 3 years or 5 years' time.
Yeah, and I suppose also
And-
you've got to be confident that you've actually hit the high of the particular run, because that's the difficulty,
Correct.
isn't it? You
But-
could close a position or part of the position and it could go boom, and you're like, man, you know, I was
But
confident longer
interestingly,
term and now I'm not in.
You can also pick up units on the way back down.
Well, after it's blown up, after it's taken off.
Yeah, it's the same thing.
Yeah.
You buy it when it's gone, when it's oversold.
Yeah.
You sell it when it's overbought on the way
Yeah.
back down, you know, during the retracement.
Yes, no, I get that, but if you sell it when it's seemingly overbought, but it actually isn't, it just keeps going.
Well,
That's
why
the thing
you
I
do it
mean.
in tranches and not in the whole.
Yeah,
thing.
so you've at least got something on the market. Yeah,
Yep.
yeah.
Yep.
In thirds, is it thirds of tranches rather than half,
Thirds.
or yeah, that's interesting,
Thirds
mate.
is best.
So you've always got a third in.
Yep. There's another
Cool.
setup on dollar on the minute chart. You could buy it now with the stop loss at you still got my chart?
Yep.
27.31 whatever. First take profit on that. I can't work this out on gold. Annoys the crap out of me. 24.6 78. Is that right? 78, I've got to have 75% of 78. Testing me. 52, 53.
Yeah, sorry about the 50 mark, isn't it?
Oh, nearly back there. That can't be right.
So remember, you're looking at on the crosshair, you're looking at the second. So if you come back down again, you see the second lot is 25, right? So you can do it on that instead.
I can do it
You
on
go back-
that?
Yeah. Yeah.
Okay, cool. So 16
Yeah.
or 17. So 27.36, let's say.
Yeah.
That'll be the first take profit. And what was it? 27. So 54 from there. What's this one doing? We'll get rid of that.
That was your second take profit on the one on the way down.
54 from there. Gee whiz.
Bit bigger this one.
27.39. About there.
Awesome.
TP1
Really-
target.
I really like this, mate. Really like this. You know what? So second Bollinger Band gets hit, close above the midpoint one, and then the second bar you're taking,
Trade
the second one that
bar.
closes. Yeah.
But
yeah.
I found it's far better if this bar retraces before it closes.
Right.
So whilst that's very strong and looks great, I'd much prefer it like it did here, basically.
Yeah. Yeah.
So once you've got that, that looks really good.
Yeah.
But yeah, still experimenting. You know, as I say,
Like it.
please don't put your house on these guys. This is an experiment. My goodness, look at the time.
Oh, yeah. It's yeah, we've run out of time, and thanks so much, Catherine, for your participation. It makes it just, you know, this is what this session is meant to be about. Just
It
all
was
of us
supposed
getting
to be a
together.
talk show.
Yeah, just chatting about markets, right? So yeah, thanks for coming on board and being a trading buddy of the day.
Great, thanks, guys. Appreciate, to be able to sort of interact with you guys is always fantastic.
Nice
Cheers,
one.
Catherine.
Okay,
Lovely
so
to
we'll
see
see next Monday. We'll be back, but right now we're going to play George, and George will see us out for the session. You and I will have a chat afterwards, mate. If you still want a quick chat in about 20 minutes.
Well, probably while George is on, we can do it.
Oh, great stuff. All right, sounds good.
No. I'll stuff it up. We'll be talking on this show. Wait till it's over. Cool.
Yeah, we'll do that. Okay.
Have
here
a
you go.
great week, everyone. We'll catch you next week.
See you soon, guys. Oh, hold on. I've probably not shared my sound.
God, he's a handsome dude, isn't he?
Oh, he's a good-looking guy, George. He's got everything, George. He's like James Bond. There we go. Oh God, this really has changed, isn't it?
It has massively.
Okay. Should be all right. Oh, adverts.
As well. We're getting paid for this, right?
Adverts.
Kicks in the money, right?
Yeah, I think you would
Oh, no, what's
understand
going on?
any present.
Warren.
Here we go. This is what we're really
Good day,
after.
traders. I trust
There he
you are
is.
well and that you are enjoying Trading Buddies so far. First Monday of the month. All sorts of interesting drama unfolding, with the great nation to the west of many people. We'll see how that unfolds over the next few days. But we are in the market. The markets are open. Name is George Nyabanza. Thank you to Jeff and Ash for having me as your guest. So we are tracking these 5 markets. Let's have a look at where we're at. Now, we now have, in DAX 30, we called an all-time high here in September throughout the month to see what would happen. But now we have a new all-time high, which is the high of October. Now, when you look at this, you're probably starting to get a sense of the way I look at markets in terms of price action. The markets presently are setting up in favor of the bears. Now, why do I say that? Just, if we look back July, awesome rally by the bulls. Absolutely. Couldn't ask for anything better. You probably could, but this was as good as it got, right? Failed breakout, good candle for the bears. Bears reversed, the literally erased half of that bull run. So the bears were pretty strong. Bulls came back and bulls just saw that as a higher low and attempted to break out above that. And their goal, of course, was to get to a measured move within this area, which is where we got to. But we get, so the breakout above, July failed initially, and the bulls came back, broke out above that. Pretty weak for the bulls at this stage. I mean, they should have just continued going up. So that's also starting to tell you signs that there is a problem with the case that the bulls are putting across. There's a good, strong case that the bears are putting across, follow up by this failed breakout above this level, trying to get to that measured move, micro double top, micro wedge top. So good enough for the bears, again, decent enough for the bears in terms of a pullback. But you got to be saying to yourself, okay, even though the bears are showing strength, but we keep nudging up, how much more is there to go at this point? And we spoke about this in last series of videos. Failed breakout above the high of September, and now we have a beautiful reversal pattern setting up. It's always setting up until it's confirmed. So we have 3 attempts to push up. 1, 2, 3. That's a wedge top. On that high, we have a micro double top. But we look to the left, we have a larger wedge pattern. 1 here, market went up. 2 here, the market went up. You could call this high double top out of 2. And now we have a 3rd attempt followed by a good breakout by the bears. You could keep looking back and keep seeing all of these attempts. So a beautiful case for the bears. It's a reversal setup, wedge top, higher high, double top, micro wedge top, everything we can stake in there is in there. But all the bears had to do for us on Friday was to give us a candle closing here, and then we'd all have been saying, sell, 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 sell. But they failed to do that, which is good for the bulls, right? Because doesn't mean we're going to break out above that, but now we can possibly just get into a trading range. The market can keep doing this. And what it did now, up and down, it can do down and up to the top and down again to the end of the year. We could just end up in a trading range, which, because a pretty wide enough trading range can allow range traders buy at the bottom, sell at the top, buy at the bottom, and keep on doing that. the probabilities, as I was saying, a reversal pattern at this stage because of this lower high, beautiful high test candle, good follow through, breaking out beneath that previous higher low, which the bulls could have used to get up, like the higher low here. They could have pushed up, but they failed. The higher probabilities favor the bears. All they need to give us is even range price action tomorrow, Monday, today, the day that we're in, go sideways and close beneath this low. Just take out the low of the month of October. Then we have a good sales setup. What should you do as a trader if you're trading the daily time frame? Or, you've got to wait. If you want to put an order here in case things happen while you're away, then you do that, but your stop is way away there, because you're trying to sell beneath bottom of the trading range. Can you buy here? You can buy if you want, put a buy order above that, but I would look at this candle, just do a measured move and be down here so that if I trigger in and it comes back, hopefully I can get but that's higher probability with all the factors. Just wait one more day and see what we get and be informed by the unfolding price action. UK Brent, thank you all. Been absolutely good on the 5-minute chart because all of these tails, they are fantastic moves on the day. Beginning of last week, good gap down by the bears. And in the bears, if they're strong, they've sold completely slightly down, but they failed. It was bull candle, the bulls had bought here. Again, measured move of a pattern, stop will have been down here. Seeing that, probably touching your stop to here and wait to see whether we get acceleration up. No need to panic. You took the trade, so you move off the risk and see what happens. That, of course, on one hand is a disappointment for the bulls because you want acceleration up. On the other hand, if you understand your price action and realize we're in a channel, it's not a surprise. Most trading range breakouts fail. A channel is a stop in trading range. So that, we expect that. That's why you want to use a wide stop. And then wait and see. If you are still bullish, wait to see, hold your stop, if you're in a trade here and see what happens. It might just come down, go a bit sideways and go up again. This might happen down and then up. It just depends where your stop is. So if you take it, that trade somewhere, you would have been holding your stop here. So you'd have been fine, make profit. So you're taking a trade, put your stop here and hold and see what happens. If you are a bear, would you sell? Well, if you're selling this as a bear, you're saying, I recognize you on the channel. I'm only selling for the scalp because, high probability we might go and test this low or maybe go to the bottom of the channel. So put a measurement stop, sell, trail down and see what happens. By the way, you don't have to use measurement stops for scalping. You just put your stop here. As soon as it goes a little bit, touching your stop, take profits. So the scalping approach is different. The stops that I am talking about that I use, my goal is to swing and try and catch those big moves. And I don't want to get stopped out early. So that's UK Brent. Been some beautiful profitable trades on this market, both long and short in the past week. Silver, man, we spoke about this. And way back 2 weeks ago, we said, well, bulls want to buy in the breakout. We've reached the measured move and scalped out, taking profits. Now, we have another pattern that is favoring the bears. Failed breakout above the high of September, yeah. Good for the bears. That follow through, absolutely fantastic. Bulls really wanted to change things, but failed at the measured move. Scalpers taking profits. There's possibly some other things on the left that's causing that. Micro double top, beautiful for the bears. No follow through. So if it's sold, classic case, we sold. My argument, because I'm not selling to scalp, I'm selling to try and hold long. I would have put the stop up there, taken off the risk, and then just hold. Be prepared to get stopped out at half because this might happen. Micro double top, lower high, fantastic. Follow through now. I can pull my stop down to this level and wait to see if the bears are strong. I'd have loved the first day to be a little bit stronger, but opportunity for the bears to smash through this level. If they do that, then they want to get to take out this level. And when I took my screenshot, I forgot to put my measured moves. Anyway, you guys know measured moves. That high, that low, the bears break beneath here. The goal is to get to a measured move of that to here. That's the goal, which means they'll have to get through here. So if you're going to sell this, You know, if you just say, okay, I'm selling, so you're placing an order. I don't know where we are now by the time I will start placing an order here. You know, I'll put my stop above here. It's a good place to put the stop and get triggered in, then you can start to trail your stop. But your assumption is that bears are going to be strong to break through here, get down here. This is a much weaker bull breakout than here. So maybe they'll have no problem to get beneath it to smash through. Then you can trail your stop down. Would I buy? No, of course not, until I get a decent enough bull structure at some point. You know, if the rest of today is a weak kind of dodgish candle, and then tomorrow we get a decent enough low test candle, if you get something like this kind of structure, then that's worthwhile, you know, Tuesday, Wednesday, whatever, Thursday to buy if that takes place. So keep a look at that. Euro yen broke out of that tight trading range, which makes the whole range, you know, this bear candle. That's the whole range. And bulls breaking out above, they want to get to a measure move. So that's the objective, to get there, which means they'll have to, you know, get past, you know, this powerful lower high. Why is it powerful? You know, good for the bears, this bear selling off, but became more powerful here with consecutive bear trend candles. So that's where the big bears, that's where the bears that caused this came in. And of course, they want to defend their positions. If they're in, if not, they want to sell again. So in here, you can expect a lot more selling. If the bulls are strong, you know, they'll have to get above you. And once they do that, then, you know, they can just work their way back to that all-time high. So again, you know, this candle is a pretty weak candle. So, well, why is it weak, George? Good question. Because of the tails. Yeah, you know, you want a candle closing beneath low. You want follow through. Then you can sell a breakout if you want, with a wide stop, or wait for a breakout pullback. Higher probability of breakout pullback, but lower profits than taking a breakout. So you can make that decision. So probably better to wait, you know, if you really want to sell, because you've been away for a few days. Sell here, measure move stop is above here, hold it there and see what happens. But best thing to do when things are unclear and very weak for either side is just to wait and get more information. Cable, pound, good for the bears. Went into this channel that we spoke about. Bulls tried to break out above the channel, like we said, when looking at Brent crude, most breakouts above channels fail. So, you know, if you're a bull, as soon as it breaks out, if you're gonna buy above here because you've seen the breakout, you need a measured move stop somewhere way down here. You would have seen that, said, oops, mistake, let me get out because I ignored the fact that most breakouts above channels fail. Then you can get out with little damage. If you are a bear, because you expect most breakouts to fail, you want to sell beneath that. Your problem, of course, would have been the tail. You know, why can't the bears give us a beautiful candle like that or like that? It doesn't have to be huge or even a high test like that. But anyway, if you took that and you aim to get to the bottom of the channel, you are scalping mode. It's a very tight channel. You know, you take your trade as a scalper, tight profit, boom, gets hit, bank your profits. So this is where we have cable. We just need a little bit more information. I mean, if you trade trends on the daily, this would have been beautiful, beautiful, beautiful. A bit interesting, a bit tricky. But the thing, guys, the thing about taking your trades, you don't know that this is going to happen. When you're here, you don't know that. Right? When you're taking, look at this, okay, break up, pullback, I'm going to take a trade here, put up, so we don't know it's going to do that. You know, even when you're here, and say, should I jump in early or should I wait? You know, I'm always talking about, you know, take the initial trade, the breakout trade from the reversal, put a wide stop in, or if you want higher probability, you wait for a pullback, you get a pullback. Sometimes these are beautiful pullbacks. Sometimes you don't get a pullback, it just boom, goes. And then it comes back and goes again. So my point is, whatever strategy you are trading, when it has set up, whether take the strategy, and even taking the strategy, you've got to manage your trades, you know, in terms of what you do with your stop, when to get out and when to stay in. All right. Thank you very much. I sincerely appreciate you making the time. And I hope you have, you know, if you do follow these things, have a great time tracking the American elections. If not, stay with the markets and see what the markets give you. All right, guys, take care, and we shall see you again. Bye-bye.